We are seeing shareholders certainly liking this decisive action that you've announced this morning. You're seeing Qantas share jumping by the most since December 2014. My question, though, is what's the worst case scenario that you're planning from this coronavirus? And not just coronavirus, right, but also the associated economic slowdown, the protests in Hong Kong that have already begun to weigh, and how much flexibility does the business have?
Yes, so we report today our first half results, which show that the group is very strong. We had an underlying profit of 771 million, but we did say coronavirus was going to impact us between 100 and 150 million from what we can see today. So we are taking 15% of our capacity out of Asia, 6% out of routes to New Zealand, and 2% out of the domestic operations, which are all being impacted by the coronavirus. We are publishing that till the end of May. We are keeping flexibility, though. That will be the equivalent of grounding 18 aircraft and having 700 too many people. We're managing that without redundancies. We're managing that by asking people to take paid leave. But if things were to continue the way they are, we would extend that until the end of June. Our estimate is based on this continuing the way they are until the end of June, which is the end of our financial year. If things were to get worse, we have the capability to take more than double that level of capacity out. If things were to get better, we have the capability of putting that capacity back in. And I should say the only benchmark we have on this is with SARS. And with SARS, we did see a significant rebound after these items were over. So we want to keep the aircraft and the people ready to take advantage of that rebound.
In that sense, would you not be looking, I'm wondering, I guess, how many planes could you potentially ground, right, in this worst case scenario? And also in terms of offering staff unpaid leave or potentially doing job cuts, are these numbers that you've crunched as well?
Yes, they have. I mean, we are, as we said, grounding the equivalent of 18 aircraft, and we're going to take advantage of bringing forward maintenance so that when we need the aircraft, we can get full utilisation out of them. And if this was to continue for some time, we're celebrating 100 years this year, the oldest continuous operating airline in the world. We have a lot of leave balances built up, so we can have enough leave to manage this situation for at least 6 months. So we don't see the need to make redundancies. We're trying to protect as many jobs as we can, and given the financial strength of the company and given the rebound that we expect to occur, we think that's a sensible thing to do.
Alan, we've had the virus outbreak, we've had SARS before, but overall we continue to see this slowdown in the Chinese economy. Does this make you feel that you need to diversify your business away from China even more?
So less than 2% of our international operation is to China. Most of our earnings, as we saw in the first half, come from our domestic business and our loyalty business, which are very diversified. We're making close to $400 million a year now of loyalty. That's where we have these businesses in insurance, we have credit cards, we have a diversity of businesses there that make us very unique as an airline. At the domestic market, we have 62% market share in that market, over 80% of the corporate market, the vast majority of the profitability. And that's a very stable duopoly, which we perform exceptionally well in. So I think compared to most airlines in the region, and we've seen some of our competitors having to take a lot more capacity out, we're a lot more diversified, a lot stronger in terms of our balance sheet and strength, and a lot more capable of managing this going forward. Of course, we're keeping a close eye. Australia's links with China are quite big. China is very important for the economy here, so we have to keep a close eye on what happens with the economy. But usually when demand weakens domestically, if you get supply right, which we've always done, we've managed the profitability very effectively.
How much of your domestic business was hurt by the ongoing months of the bushfires in Australia?
Yeah, so we did see in the first month or so of the bushfires a bit of an impact with some demand weakening in North America and Europe, but that recovered pretty fast. And domestically, we again saw the same thing, a pretty good recovery. And if it wasn't for the coronavirus, we would have thought the bushfires were having a minimal impact. There are some regional routes that are significantly impacted by it, like Kangaroo Island. Now, our competitor withdrew from that route, and we believe as part of our community obligation, our social responsibility, we needed to fill that gap. So we've added more capacity into Kangaroo Island to do that, to support these bushfires affected areas. In fact, Qantas has raised close to $3 million through its own donations and its customers' employees' donations to help the bushfire affected regions. And we've been flying firefighters around the country for free to try and help in that position.
Alan, how much of a domestic impact do you expect to see from the lack of tourist arrivals and even student returns to Australia, right? Do you expect that to have a sizable impact on your domestic routes as well?
So yeah, we're coping with that with supply. So 8% of our domestic operation are international travellers, and around 2% of that is from the Asian market. So we are seeing weakness there, which we have seen for the last month or so. And what we announced today is that for this half of the year, we'll be taking 2.3% capacity out of the domestic market. It's more focused on Jetstar. Jetstar in the last quarter, we're taking out 6% capacity, and we think that's sufficient to be able to manage the situation. I will say that, you know, that could reverse depending on our competitive position. We want to maintain our market share, our strategic strength, so we're making sure that that is also a focus of where we are. But we think our competitors are in the same boat we're in, and that sense will prevail on some of these markets in terms of capacity to manage the fall in demand.
Alan, you're due to place an order for short-haul planes, including replacing some 75 Boeing 737s and other aircraft. I'm wondering if a decision is getting near as to whether you would go for the MAX or the A320. Would you be waiting until after the coronavirus impact is more certain? Would you be waiting to see whether this return to service by the MAX happens?
So our biggest focus at the moment on fleet is that by the end of March, we have to make a decision on Project Sunrise, which is the A350-1000s, to fly direct from Sydney to New York, Melbourne to New York, Sydney to London non-stop. And we are focused on getting that decision out of the way. We believe we're in negotiations with our pilots and the regulator. We believe and are confident that we will get there. There will be aircraft that will arrive in 2023. These are long-term decisions, and a company like Qantas will make the long-term decisions even if there are short-term headwinds, because that's the right thing to do to plan for our future. And those long-haul operations will diversify our earnings. They're unique IP that only Qantas seems to be interested in. They're working very well on Perth to London non-stop, and our new Brisbane-Chicago service, which starts in April, is looking very strong. So we'll continue with that. And once we've got Sunrise out of the way, later on in the year, we'll be doing a competition to replace the 75 Qantas 737s with either the Neo or the MAX. So that will likely happen after the MAX is in the air, and that's the time frame that we're looking to.
When do you expect to get that agreement on Project Sunrise with your pilots? And you've even floated the idea of hiring an entirely new team of pilots. How much would such a contingency plan cost?
So we want to do this with our pilots, and we're in dialogue with them. In the last few days, we've made more progress than we have in the previous 7 months, which is a great sign. And I think that is our focus. We will be putting a proposal to our pilots towards the end of March and asking them to vote on it. And if they vote on it, they will get to flying, which will result in 1,000 job promotions, big increases for first officers and second officers that get those promotions. And that's what we're focused on achieving. But we have to have a backup plan if that doesn't occur. Project Sunrise is too important for us. We need to have these flights in strategically. So if we can't get there with our own pilots, there's plenty of other pilots that are interested, Australians that want to come home, very experienced pilots that want to operate in this space. But that is a last resort. Our prime focus is getting a deal with our pilots, and I'm very hopeful we'll do that by the end of March.